Good morning, good afternoon, or good evening, and welcome to all the trade day team to the TGI Friday. Thank God it's Friday, 27th of June. Bull versus Bear webinar. Steve Miley here on the Call for Trader. Welcome, everyone. We'll go through a fairly quick webinar this morning. Not a huge amount to add to what's been going on recently. Focusing on data, fundamentals, geopolitical risks, and all those factors that are influencing financial markets right here, right now, central banks as well. So let's kick off with what we've got coming out. French inflation data slightly higher than expected this morning, not really impacting the US markets overnight, though. Looking into today, main focus is going to be on this PCE data. So PCE data, remember, personal consumption expenditure. It's inflation data. It's the Fed's preferred measure of inflation. So we're certainly going to be keeping an eye on that. That's in just under 1 hour. Just under 1 hour. Keeping an eye out for the PCE price index data in here. So watching for that. It's going to be the main potential driver for today, unless we get anything coming out on tariffs, any developments on Iran, Israel. We also get, don't forget though, at 10 o'clock, 3 o'clock here, 10 o'clock Eastern time. Michigan consumer sentiment data that can often have an impact on markets. So just watching out for that towards the end of the trading session. 10 o'clock, into the latter part of the morning's trading session. 10 o'clock Eastern time, the Michigan consumer sentiment data, and in 1 hour we get that more important PCE data to watch for. I'm just going to quickly refresh it. The Morning Americas didn't. Is that loading up? Here it is. Normally Briefing Americas is here now. So we get some more details in here. We had this kind of understanding between US and China previously in here, but more of a more positive on again US-China trade deal was signed 2 days ago. Beijing converted some aspects of a framework accord. So positives on that, helping stocks in here over the last 12 to 24 hours. Higher, remember US stock indices breaking to new record highs over the last 24 hours. So that's all very, very positive in here. And so, yeah, that's the main, the focus in here. Most of this other stuff that we have in here going into today, European leaders pushing half of governments to buy local when they start spending, personnel carousel, Tesla, none of this really impacting. This is the big deal in here. US, China positives on trade talks. So stocks buoyed by trade talks, again from Bloomberg here. Fed rate cut bets as well in here. Soundings coming out from Trump in here from yesterday saying potentially going to replace Powell going forward. And if that's the case, it's likely that he obviously wants rate cuts, so potentially with someone who's far more dovish in here. But Fed officials at the moment saying that they need more months to gain confidence. So that's what's really coming out of the Fed. But nevertheless, some thoughts about potentially a more dovish Fed governor in here is pushing the chances of potential rate cuts. Majority of Fed officials leaning against July interest rate cuts. When it comes to the Fed Watch tool, we're certainly seeing further out, though, there is anticipation for rate cuts down the line. Wall Street goes all in on risky stocks. Risk assets doing particularly well. NVIDIA leading the way higher. NVIDIA's back at all-time highs along with the major averages. Wall Street flirts with new record. Already mentioned that. US stock futures rise ahead of the inflation data. We've already mentioned investors anticipate a more dovish Fed. And we'll look at the Fed Watch tool shortly. Market bets on a more dovish Fed as Trump eyes Powell replacement. Shares rise on China-US trader. So a combination of a potentially more dovish Fed and trade hopes between US and China setting markets higher, and also helped higher in here by the ongoing truce between Iran and Israel seeming to hold at the moment. Oil sets for its steepest weekly decline in 2 years. So having spiked significantly higher. We'll take a look at that shortly. It comes significantly back lower in here, so easing concerns around that. And that's obviously then the easing of those concerns is helped to buoy stocks as well. Running around the major US as global averages, Nikkei particularly doing well this morning. Up nearly 1.5%. Hang Seng really little change, slight dip in here. European bourses are all better across the board this morning. UK FTSE up 0.6, German DAX 0.7, and 1.3 on the French CAC. And US averages on the overnights and the futures markets up overnight. Around 1/3%, 3 to 4 tenths up on the major indices overnight in here. Let's go to the Fed Watch tool, because this is interesting the way this has shifted in here over the recent days. So still not much chance of a rate cut at this is for the July meeting. So pretty much 79 to 80% chance that we're unchanged in July. But if we go to September now, not only we only have now a 10% chance basically that we're unchanged. So we have a 90% chance now of the first rate cut coming most likely now in the middle of September, but also an off chance of a bigger cut, a 50 basis points cut, 18%. And this is not insignificant, 18% potential for a bigger cut at the September meeting. And then by October, we're certainly starting to price in 2 rate cuts. So this is for 2 rate cuts by October, or a total of 50 basis. If it's not 2, maybe one big one, 50 basis points. So we've got 55, 65, 67% chance that we've had 2 rate cuts by October, or 50 basis points by October. And now, remember, this was the highest peak in here. This is for 50 basis points by the end of the year. So at the end of the year now, and we've got in here, so what's this? 35. So 35, 36, 40, 76, 80, 90. Oh, sorry, I could have been easy with that. These are right. So only 10% chance in here that we've had we don't get 2 rate cuts or 50 basis points by the end of the year, but there's now over a 50% chance there's 3 by the end of the year. So between market now pricing between 2 and 3. Remember, the Fed's dot plot chart says 2 rate cuts. Up until now, all the betting was on really. This was by far the highest peak that we were looking for 2 rate cuts as well. But the market now shifting for potential kind of 50-50 really between 2 or 3 rate cuts now by the end of this year. And yields tracking lower as well with that. So we see in here 10-year yields grinding lower throughout this week in here, going to lower yields as the market becomes more comfortable with both potentially for a more dovish Fed, but also for a solid economy and a soft landing in here. And we see that across the board in here on the US fixed income report in here, with bond yields across the board, 30 years going high, new highs here, 30 years 10s, but particularly in here in the shorter end of the curve, 5 years and 2 years sprinting higher. And that's an anticipation, just like that Fed Watch tool is showing in here, of a more dovish Fed. So remember, the short end of the yield curve reflecting more what the central bank's doing, the longer end of the yield curve reflecting trust in the economy. So trust, but not only building in the economy, but also anticipation of lower rates in here. So all of that positives for stocks. And as we said in here, going to the stock indices, making new higher, either at or getting very close to all-time highs in here set early this year. So back in February in here, we're seeing the all-time highs, either at those highs or very, very, very close to those highs. So looking bullish, particularly bullish here. And just a quick nod to, so gold kind of been sideways, but lower over the last week or so, potentially threatening this trend line. So potentially for gold to go significantly lower in here as we go more into a risk-on mode. But more significantly, there's that big seller from being nearly $80 in here, a barrel in here for August crude, now trading down in here closer to mid 60s in here. So oil completely collapsing in here from having that spike higher through all the concerns around Israel and Iran. So back down to where we were trading back in the early part of June. And so markets allaying those fears of escalation, and that's helping stocks higher as well. Okay, guys, I'm going to wrap it up there. So bullish going in today. No reason not to be bullish. Not only out on the all-time highs, but markets potentially going to push higher today. Remember to be keeping an eye on now in 50 minutes, the PCE date. That's going to be all important today. Any more soundings we get on tariffs in here is going to be important as well. And then don't forget, just sneaking up at 10 o'clock, the Michigan Consumer Confidence sentiment data, watching out for that too. I'm going to wrap it up there. I'm going to wish you all a great trading day, and I'm going to wish you all a great weekend too. We'll be back with you with another Bull versus Bear webinar on Monday. Until then, take care.